Welcome back to the Business Breakfast. Let's cross live to Australia now. Josh Gilbert from eToro joins us live from the Sydney trading floor. Morning, Josh.
Good morning. How are we, guys?
I'm good, mate, but I bet you're better. How's the mood in Sydney? Record high on the stock market. Are people running around high fives and victory laps?
I mean, it's been a bit wet here today, so I think that's dampened spirits a touch. But yeah, look, I mean, that sort of ASX new high has been coming for a while. We've tested it a few times over the last sort of couple of months, and really it came after yesterday's jobs report locally, which showed weaker unemployment, higher unemployment, weaker jobs being added. And that means that we've sort of seen markets start to price in more rate cuts coming from the RBA this year, and that's given a bit of a tailwind to the local market.
Is it just a mining story? As outsiders looking in, we have these cliched views of what drives a certain economy or certain country. I'm sure it's far more nuanced than that. What are the main drivers?
Yeah, I mean, look, the big drivers locally are banks. So the big financial names are sort of trading near record highs. Commonwealth Bank here is one of the most expensive banks in the world, and that's sort of driven us to record highs. You're right, in terms of what we're seeing from those miners and the resources names. They've had a really good time as of late in the last couple of weeks. Iron ore back above $100. But we're also seeing the technology sector here perform really, really well, as we've seen, across most markets around the world. So those sort of three are the key drivers of the ASX so far in 2025.
Thanks for that, Josh. Right, let's talk about Netflix, the first of the Magnificent Seven tech companies to report this earnings season, and overnight the numbers were good, partly thanks to this. Squid Game Season 3 driving Netflix to a 16% increase in revenue for the second quarter and a 45% increase in profit. What do you make of that, Josh?
Yeah, I think the numbers today just sort of reinforced, Netflix's position as that sort of streaming king. Really solid numbers today, beat across the board. Raising guidance as well for the next quarter. And I think you mentioned there about it being Squid Game, and I think this is really important, right? It's content. Content is what keeps driving users to the Netflix platform, keeps them engaged. We're seeing users really sort of basically engage well with their new sort of ad platform as well. Lots of new subscribers coming through there. So it's helping them drive new revenue streams. The addition of live sports as well has also been, a massive boon for them.
But the share price has doubled over the past year. So after hours last night, these really good numbers came out. The stock sold off a bit, didn't it? Not much, down about 2% after hours trading, but doubling over the past year. What do you make of the valuation?
Yeah, and I mean, that's probably the reason that we saw shares fall off a little bit, given that the shares have had such a huge run. A lot of optimism has sort of been priced in. We are trading at a pretty lofty valuation, but as I said, they are sort of now, really the king of streaming. They've sort of really fended off competition from, whether that's Disney, Amazon, etc. And as I say, that content slate is massive for them. Stranger Things, these types of, new content coming through in the second half of the year. And I think that's a clear catalyst for them to sort of keep driving subscribers into the second half of the year. So yeah, look, valuation-wise, looks a little bit lofty, but I think the continued rollout of new revenue streams, ad-supported tiers, that focus on live sports, localized content as well, I think it gives them a competitive edge, and I think it will keep driving future growth.
A little bit lofty. Price-earnings ratio of 60, and dividend yield of 0%. It's not tempting me on my eToro account anytime soon, Josh, but clearly a lot of people do want to buy them. We've got the other, obviously, earnings season at the moment. The rest of the Mag 7 will report soon. Broadly speaking, what's the theme?
I mean, it's going to be AI. It's really going to be to see how that AI demand is accelerating across sort of industries, I think. We are in that midst of that AI boom, and we're sort of seeing this as a transformational, once in a generational shift. That's going to be led by, NVIDIA, Microsoft, Palantir, Amazon, Alphabet, those big tech names, as you say. And I think what we're starting to see as well is a bit of an easing from, the Trump administration, which is giving us a bit of positivity going into earnings season about the forecasts moving forward. So look, NVIDIA for us is going to be the key name. It's going to be the bellwether of AI. It doesn't come till the end of earnings season, but, if their results are good, then it will, be a big lift for tech stocks.
Quick word on crypto, if we can. Bitcoin hitting a record high earlier on this week, $122,000, just shy of that now. But the big one that's been driving the crypto rally this week is Ethereum. Ether, normally the poor distant cousin of Bitcoin, but this week Ethereum taking center stage. What's driving that, Josh?
Yeah, so we've seen Ethereum really underperform against Bitcoin for the last couple of years. And what we've actually seen is Ethereum break out against the Bitcoin price for the first time for a long, long time. So really, from a technical perspective, we've seen that bit of a breakout. And that has often meant that when we see that Ethereum breakout against Bitcoin, that we're seeing a bit more of a broadening of this sort of crypto rally. So we're seeing really strong ETF inflows for Bitcoin. I think we've got a bit of a solid macro backdrop in the US, which is sort of really driving market momentum. And we're seeing a bit of a rotation out of maybe Bitcoin into sort of some of those smaller assets, which have outperformed Bitcoin over the last sort of few days. So we see Bitcoin as sort of the digital gold, and we see Ethereum as the digital oil.
Finally, Josh, just want to ask you about some of the articles that you've been writing on the eToro site at the moment. I'm looking at your bio. Josh is a market analyst at eToro, specializing in Australian and US equities and crypto assets. And I'm looking at recent articles by you. And the most recent one on July the 8th, nothing to do with Australian US equities or cryptocurrencies. Dubai's chocolate market navigates a bittersweet 2025. Are you really jumping on the Dubai chocolate bandwagon, Josh?
We had to, we have to. That's something we've got to keep up to date with. I was in Dubai just sort of recently as well. So something that we wanted to sort of cover. And basically, we were talking a lot about sort of cocoa prices, which have sort of seen, huge price volatility over recent years. And of course, what more to talk about than Dubai chocolate? When I was there, it cost me $30 Australian dollars for a bar. So I felt that it was time to sort of dive in and find out what the hype was all about.
But it's interesting. We had actually a chocolate maker in the studio yesterday, day before. Brandy, when were the guys from Al Nasma Camel Milk Chocolate? We had the CEO in, Martin. He's a great guy, and they're selling Dubai chocolate by the lorry load at the moment. But he said pistachios are not expensive. He said there's all this hype about cocoa prices going through the roof and pistachio prices. He said it's just not true. What's your take on that?
I can't talk to pistachio prices so much, but look, with cocoa prices, there was certainly a spike, and we certainly saw, a huge rise at the start of this year. And prices have come off a little bit. Really, a lot of that, volatility that we saw through cocoa prices was driven by sort of bad weather. That meant bad crops. And ultimately, we had limited supply of cocoa around the world, and that meant prices were sort of moving higher, and that put a lot of pressure on chocolate makers. And what we've probably seen more than anything is what we would call shrinkflation. So rather than maybe your chocolate getting more expensive, it's just getting smaller. And we saw that through sort of Easter periods here. It's something I wrote about here in Australia. You're paying the same price for your chocolate, but ultimately you're getting less over time as well. So yeah, cocoa prices have basically meant that chocolate manufacturers have had to sort of take the brunt of higher prices.
Josh, 7:30 a.m. in Dubai. It's 1:30 p.m. in Sydney on a Friday in July, and the stock market's just hit a record high. You need to get yourself off for a good lunch. Take the afternoon off. Enjoy. Josh Gilbert, market analyst, eToro. Always good speaking to him. This is the Business Breakfast.